Greetings, this is Jeff Scott. This is June 27th. This is my top-down review. A couple things will be different this time. I'm trying a different computer on the road. This one is 4K plus, so I had to adjust everything because my Snagit, where I do my videos, doesn't do the plus part. So that will make things a little bit challenging from time to time. Haven't tested out the audio yet on a video, so we'll see how that is. But I think we'll be in good shape. But when I do screen mode, or slide mode rather, on my PowerPoint, it goes beyond the area that's being captured. So I'm going to have to stay in this mode right here. So I called today, will major breath thrust lead to higher highs? And I may be the only person that's even thinks this was a breath thrust because no one else was talking about it. But I see something that I like. It's June 27th. Again, my name is Jeffrey Scott, and my email address is hgsidoc@gmail.com. This is for educational purposes only. I'm a doctor, not a broker. I am not here to give you investment advice. I'm to sort of demonstrate some of the tools and techniques that I use to make money in the market, trading real money. I paid for all these tools, and trading involves risk, and you alone are solely responsible for any investment decisions you make. The title here is Be Your Own Guru. They're very smart people here. I've done recent things with Jody Samuel and others. I think the key is to learn how to trade, and you learn how to trade by getting educated. You get educated by reading, by watching videos, and going to seminars. And what I did is I try and learn something from everybody that I listen to and figure out how I can make my trading better. I want to be my own guru, and you need to be your own guru. What I need on my desert isle, I need TradeStation and Thinkorswim with the various indicators, whether it's John's, Q tools, Dr. K tools, and Thinkorswim. And I use HGSI, EDGERATER, aftermarket. No one pays me to do anything here. I'm truly an unpaid volunteer, and this is just education. For HGSI, the software tool, I put this here just because a lot of people don't know it. highgrowthstock.com, again, no financial or management responsibility for me. Free 30-day trial will give you access to the program without even using a credit card. And under investing strategies, you'll see hundreds of videos by me and others like Ron Brown. Stock patterns are cyclical. Where are we? This has been a tough market. If you go back to March of 2009, you had months to figure out that we entered stage 2 greed. And you could have run this period here for years, all right? If you look at 2007, 2008, you probably didn't know we'd rolled over until we were there, but you could have rode this for many, many, many months. We're not in an easy market like that. We've been in this uncertainty. And if I was to put a box around the top here, it's kind of like it's oscillating. And every time I think we're going higher, I've learned to say, but we can go lower because typically we turn down. When I think we're going lower, like last week certainly looked like we were probably going lower, we went higher. Now, seasonality, I pointed out, was very strong last week. So it wasn't a big surprise to me, but maybe the extent was. So we're still in a tough market. It's sort of like a Darvas box. And the question is, will it resolve to the upside with higher highs? Or are we going to revisit some prior lows? Now, those who have been following me know that for example, the spiders have run up to the 161% Fibonacci extension. Well, the next extension, if we are to truly break out of this, is another significant move, which we'll point out today. You have to know, again, where we are in this, and this will apply to your stock, your index group, your sector, your industry, major indexes. Where are you? Because where you are should determine how you approach. Now, I will tell you that my gut is we're going higher this week, but my brain said every time I think that, because of the tight area here of this Darvas box, we actually move lower. So I put on some extra hedges just to protect me. I've had big gains this year, and so those who follow me know that I constantly have hedges on. I only can imagine what my gains would be if I just ignored my hedges. But the reality is I like to sleep at night. Sector review, this is just TradeStation with the major ETFs and a list of stocks underneath. And you could see it's a sea of green. What's interesting is financials, almost everything is green. Utilities are all green. Real estate. So some of the defensive plays actually caught up to the more aggressive parts of the market. Now let's look at the major market. And I like looking at the futures. So here is a daily of the S&P futures. And just price chart with moving averages. If it's a black background, green will be 17, same as a white background. Yellow on a black background is my 50-day moving average, and it becomes blue on a white background, and red is a 200. Those are all simple. And on a stock chart, you'll probably see an 8-day exponential in purple. Now, these are Fibonacci extensions, 50, 62 or so, whatever this is here, off of the 2020 low. I want to point out this one right here. This level of extension is 43.64. That's my next target. Now, we have been going sideways, oscillating around this retracement right here. And I'm not sure that I'm ready to give that idea up, that we're just oscillating here. But we pulled back hard the prior week, and this week we launched. It looks like we're in a new uptrend. Again, every time it's looked like we've been in a new uptrend, we've come back and retested. Well, one of these times we're going to actually break out. And you notice we've got new highs here. So I think we're in a range between 46.34 and 41.53. And all I've done in my projections is I've changed my top projection to a little bit higher. I'm not convinced we get there. That should be resistance again, just like this spot was resistance here. This spot, this area took a couple days to break out. We'll see, but that's how I'm looking at this. And the only thing, there's a lot of things that worry me, but the thing that worries me probably the most is there's just no volume on this rally. So we shall see. Summertime, maybe we shouldn't see the rally. And as I said last week, this is a seasonal strong period of time. So I've got a new target I'm looking at, but a breakdown below will be a signal to me to add more to the downside. We could still bounce around here. We've done it before. Let's look at the Nasdaq. So we have a new buy, all-time high on the ES this week. Nasdaq Futures. A very similar pattern. Last week we were looking at potentially a triple top, and we've broken out of that triple top. We've gone on to a new high territory. Again, the volume is kind of lousy. That might be the theme of this week. The Dow, not at a new time high, not at an all-time high. Now, the Dow have recently fallen pretty hard as tech rotated back in, but the Dow had a great week and actually took back at 17 in its 50-day moving average and has a new buy signal. So the Dow seems to be wanting to go higher. The Russell futures really have been in a trading range with a high of 23.66 and a low of 20.86. So a 250-point trading range, so about 12-14%. It's at the upper part of that range. I expect this to go and take out its prior high if this market continues strong. It had a little bit more volume on Friday, but perhaps it was because reconstitution of the Russell 3000, which means the 1000, and the 2000, which this one represents. And it had a doji day, which is indecision on Friday. If I look at the VIX is low. It's at 17.7. If I'm bearish, and obviously I have some concerns because I took out hedges, But if I'm bearish, I'd expect the VIX to be higher, not to be sitting here pretty compressed. So the VIX right now is our friend. It's not telling me that I have to be getting out of the market. The dollar, I mean, this is not our friend. It's your friend perhaps if you're into banks. But the weakness that we saw in the market, not this past week, but the prior week, was associated with a massive run-up in the dollar and its impact on metals and other things. The dollar eased, but you notice where a moving average might have been resistance before. We've got support at that 200. So if we can hold that 200 and go higher on the dollar, that's probably not a great story for the market. So that'll be something that I'll be watching this week. If I want to look at the weeklies, which is where I was when we started, because I forgot to turn it back last night after I looked at it, you could see how we've gone sideways for some time on the major indexes. Look at the Russell. I told you there's a box there. And the VIX has not done anything. And the dollar is trying to rally. And although I may have sounded like I think the dollar's going up because that's how it's been acting, it's still fairly low in its pattern. So the weekly things are consistent with what I showed you on the daily. So let's just move forward. Now, many of you know that I like to follow the expected moves. And, I didn't invent these. They're simple. It's taking a straddle at the money and looking at what it's at 5 days out. So I look at it on the weekend after the market closes on Friday, and I look at what an at the money straddle would be, meaning if I sold a call, sold a put, or I bought a call, bought a put, how much are the market makers expecting it to move? Last week, the expected move was about 90, and the market just laughed at it. This week, the expected move is in the 50s. Now, let me pull up that chart, and let's take a look at it. Now, the thing about this is I've been using it as a vehicle that helps me get into the market after outsized moves. So it might be hard to see, but this is a $90 range. This is a plus or minus 58 or so dollar range. So less risk. Remember, here is that Fibonacci line here. So the thing about the expected move is that the week opens on the white line. So the week opens on the white line, which is the close of the prior week. The green is a move to the upside. The red is the move to the downside. The option premium collected by the seller of that straddle basically says that as long as you stay within the green and the red, which you will 68% of the time, then the option seller will make money. Now, option sellers are some of the smartest money in the game, so they really don't want to lose money. So what happens is typically when we get outside that range, if we look back here, you could see the market traded down to the range on Monday, below on Tuesday and Wednesday. Thursday, we had a reversal day, and Friday, we came back and we closed right at the bottom of the range. Is that manipulation? Who knows? But that's kind of what the market maker wants because they still made money on that trade. Now, if we look over here this past week, we took to the top on Monday and we traded outside that range the entire week. When you often come back in, but occasionally you get these ferocious moves. This was a ferocious move week. It was a good week to be long. Now, how do I trade that? What do you do with that? Well, you look at it. When you see this pattern followed by this pattern, that reversal, I'm pretty secure in saying to myself, the market's probably going higher. And if it trades above the top of this day tomorrow, I want to go long, okay? And when I look at other opportunities, you can see how minimal range the market had for so many weeks. So the spring was coiling. Well, it broke out hard this week. You never got a reversal signal. And we closed way above the range. Just a very strong week on the S&P futures. When I've seen this, I've typically seen more time where that will occur. If I look at the Nasdaq futures, as strong as the Nasdaq was last week, it actually made it to the top, took a breath, and came back and closed at the green line. So the market makers got it back down to where they were not as exposed. This shows a strong week. If we look at the Dow futures, and I don't even know what to make of this, so let's not even pay attention. Look at this move. It was so strong on Monday. You took out the high, march forward. Now this day here, Wednesday, was a signal to me to look for the market to revert to the mean, but we never closed below the bottom of that bar. And we took it up, a very powerful move, very outsized move. The Russell future, exactly the same, got out of the range on Monday and never looked back. Now, if this doji formed on Thursday, I'd be looking for a move back on Friday. So that's indecision. It can go higher or lower. I want to look and see which way the market opens. Fascinating stuff to me. I mean, you may disagree, but to me it's fascinating. Here's a week where we took out the bottom on Monday. Tuesday looked like a doji, but which way did we go? Down. Wednesday, down. Thursday, a reversal. Friday, you knew you could get back into the market when you started trading above the top of this day. That's how I trade it. It's not how anybody taught me to trade it. The VIX has broken below its range, just demonstrating how weak the volatility is. And the dollar traded down to the bottom of its range. So very strong week for equities. We'll see if we can get 2 weeks in a row. Rates. Now I like to look at things underneath that might explain some of what we saw in the market. So rates picked up last week, a little nubbin higher on the TNX and the TYX, the 10-year and the 30-year. Rising rates are good for banks, especially regionals and insurers. Again, if you didn't hear me say before, I cannot put this in screen mode because then it goes outside the box of what the video is capturing because it doesn't like my resolution of this computer. AD lines, both the Russell 2000 and Russell 1000 turned higher this week. AD lines leading indexes higher. The one that was most impressive to me was the Nasdaq. In white is the Nasdaq AD line, all-time highs, now being matched in blue by the Nasdaq 100 index, all-time highs. This was a laggard. We were back here, breath was okay, and then the market sold off. So this is a laggard that's now at all-time highs. That's got to be a bullish thing. If I look at the NYSE, not quite to all-time highs yet, give it another week, but you can see pretty much everything, even transports, turned up this week. The only thing on this slide that turned down is the bonds, TLT. Now, you can't see the breath thrust here, but just want to show you the stocks above the 200-day moved up. The stocks above the 40 had a pretty dramatic move up. But where the breath thrust was in my 3-month new high, new low, where the number went from 16 up to 90%. And that was this is a 1-week move. Now I asked myself, is that move meaningful? Going from a low number, not the lowest number by far, to such a high number. So I then put a 1-week rate of change indicator on my chart, and you could see that there are periods of time where we've done that before. And then I ran my little eyeballs up and I looked at it, and what did I see? I saw those were usually followed by a couple more positive weeks as the market was reversing. So we'll see if this breath thrust here turns out to be meaningful. Daily McClellan, we still have divergences, new highs on the price, not on summation or oscillator on the daily nor on the weekly. Current buckets, give you an idea of how far this market reversed and why it's not yet oversold. Last week, I pointed out that over 40% of the stocks in the S&P 1500 were below their Bollinger Band. I told you that that is something that is often associated with a reversal. Then I put up the scare me deja vu slide that showed how it can get worse. But I was looking for a reversal there. This is telling me here 79% of the stocks in the S&P 1500 are below their midline. So you've got a bearish setup here. And when you get too bearish, the rubber band breaks and you go back to the middle. Well, what happened? You could see we're starting to bunch up, not yet at the middle here on the buckets, but we're 50-50 on above or below the midline. This is a big positive move, and we will not be overbought until we start seeing a lot of peaks over here on the right. If I look for a Hindenburg omen, I would not expect to find one. Although I'm watching, because once you get towards tops, that's when these will pop up. So we haven't had a Hindi in ages. A Hindi is a sign of the smart money selling to the dumb money and often precedes a major correction. If you look at percentage of new lows on the NYSE or on the Nasdaq, you can see there just aren't a lot of lows, and we're expanding the number of new highs, but we're nowhere as close to where we were back in June when we had 15-18% new highs on a daily basis. Market tone, we got rid of the reds. Yay! We had a series of kahunas on Monday, the big up day. And now choppy, perhaps, neutral, green and yellow, but neutral strong. Growth led this week. Now, you can see here on the left that if I look at ERG, which is taken 0 to 99 of EPS rank, relative strength rank, and group rank, and added them together and looked at market performance based upon ERG, that the center of it is in a nice uptrend. Now, the gray line shows you how many stocks you have. So I don't even pay attention to the first data points to the left or the last few data points to the right. Just don't have enough stocks there. I look at the meat, and the meat says growth was strong. EPS rank, maybe a little bit benefit, but look at the benefit of high relative strength. IBD stocks should have had a good week. Group rank, the better the group rank, the better. So looking at the bottom curves and the top, that tells you where you fall within your category, and the vertical axis is your percent return. You also notice that unlike last week, it's all positive. Now over here is sort of shows you why this can be misleading. I had a great week this week, and last week I had an okay week. But I underperformed according to this. I don't think I underperformed according to my account. And so all this is looking at if you had a basket of stocks and you had an equal dollar number of shares of each stock, this gives you an idea of what your performance would have been. End of day Friday, So the week's return. And these are all the different groups that I use to build my massive watch list. You can see the S&P 500 was up 2.8%. In yellow, you can see the various IBD indexes. Mike Scott's got a Focus 3, which I like a lot. It's very volatile, this Focus 3. On good weeks in the market, it's always near the top, and on bad weeks, it's near the bottom. Yes, you can see my performance was down here, but 1.5% correlated with a pretty nice return in my portfolio. That's a 1 week return. My buy watch from this week was up 1.18, but it was more 17 out of 25 were up, and on my stocks, 42 out of 51 were up. So I'm not sure that there's a one-to-one correlation because of different position sizes and the use of options and leverage and hedges, but suffice it to say, it was probably a good week for both you and I. Sector strength, it's improving. There's no red on Friday, some green, some yellow. And let's look deeper at that. Within Sager's awesome Q-Edge tool, I can look at 1, 2, 5, 10, and 30-day performance, and I can look at sectors, industry groups, and stocks. You could see that for the week, all sectors were up, 96% of industry groups were up, and 90% of stocks were up. It's interesting if you just look at the end of the week. It sort of eased up a bit. That the sectors were only 82% up on Friday, 73% on industry groups, 66% on stocks. If we look down here at sector performance, you could see over the last 5 days, all major sectors were positive, and that would be the red. Looks like energy is leading. Over 10 days, only 4 were positive, which is green. And over a month, 8 are positive, with blue up a resounding 15.8%. Down here, you can see real time in Q Edge, my buckets, and that, last week I showed you the tall things at the left-hand side, and you can see them starting to march. The darker red and green are the last trading day, or would be the current day of the market was open. The lighter one are the prior day. Love that tool. If we look at the sectors this weekend, you can see, interestingly, some of the defensive things led: utilities, financials, real estate, staples were all in the top half. And if you look at performance over a period of time, some of the recent leaders, IT, energy, discretionary, weakened into Friday. Now, I don't know if that was profit taking, was that repositioning defensive plays for the weekend, but if you remember that sea of green, everything did relatively well on Friday. If we look at industry groups, what I typically do is I take the top 3 sectors and I look at what industry groups in those sectors are leading. And you could see out of the 147, the higher number, the better. You can see the various ranks. And then typically I'll take the first bunch and I'll run Sager's tool and look for undervalued stocks with growth. And then that's a top-down approach that I do intraday. I looked at the canaries being these major stocks here. And yes, I know the price line's bookings, but it reflected in the chart. And we were looking for a breakout. We got one. We gave a little bit back on Friday. But if you look at this, certainly more bullish than bearish. And I should have changed the title. So let me change the title, because I won't say I'm a perfectionist, especially since my wife is here and she lives with me and she knows I'm not. And let me just make that at least look the way I'm saying it is. This is something I don't usually present here. I am a big fan of seasonality. People know that. My Netflix trade in January. If I was a marketer, I'd say I was legendary. It's not hard to be legendary when 17 out of 18 times it works. So you just you just play the averages. I know I've made people money with that trade. Well, I'm constantly looking at seasonality. EDGERATER has a great seasonality tool. Q has a new seasonality tool. The beauty about EDGERATER's seasonality tool is it's part of the program. It's not any extra money. You don't have to pay for data. So let's just look at this 1 month column. I have listed any stock that had more than 8 up years, less than 3 down years, and I ranked those stocks by 1 month performance. Let's look at the top. Technology, 13%, 1 month average, 10 out of 12 months positive. Triple Qs, 11 out of 11 positive, 13% return. 3X S&P 500, 11 out of 12, 11%. Ultra Pro S&P, 11%, 11 out of 12 years. Financial Bulls, 10% over 1 month, 11 out of 12. Baidu, one of my picks on the week, 10% average, up 10 out of 12 years. KKR, up 9%, 10 out of 10 years. It doesn't get much more bullish. Palo Alto Networks, up 8% average, 8 out of 8 years. This is an extremely strong week. I think it's called the week into 4th of July. And then perhaps after 4th of July, things will moderate. If you look at the bearish ones, all right, just the opposite. Technology bear, down 12 years in a row, minus 13%. SQQQ, down 11 years in a row, minus 13% average. FAZ, down 12 years in a row, minus 11%. Do you want to be short this week? My hedges are to get me through the weekend. The hedges are coming off unless the market rolls over. This is as bullish as it gets. Obviously, November, December are very bullish months. We don't think of the summer as bullish, but even within a tough time of the market, this week of July is a doozy. Hence why last week, when everybody on TV was hanging the crepes, I was looking to buy. Know your news and earnings. Lots of potential landmines this week. We've got Fed head speaking on Monday. We've got some consumer confidence on Tuesday. We've got PMI on Wednesday, plus some energy numbers. Then we start to get some of the employment numbers on Thursday, manufacturing. And then Friday is the monthly unemployment numbers or employment numbers. So this is important stuff. I really like the Econo Day calendar. It's free. I usually do this Saturday night, and they don't update the calendar until Sunday. So I was able to snag it. Here is the link. It's free. If you look at earnings this week, quiet week for earnings as we start to transition out of second quarter earnings and start moving towards the third quarter. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Market thoughts, major move to the upside, beyond expected moves, growth outperformed, financials led on economic news, favorable Fed stress tests, and benefited from rising rates. Seasonality is strong, as I showed you. I had a strong week despite a fall in Amazon. That's why I had my puts on there. Going forward, I've been wishy-washy about what my performance is, not hiding it from you, but I started the year with about $3 million in that account, but I had to take $2 million out in January to buy a house and to pay some taxes. But then I just put $1 million back in. So I'm just going to call it a simple round $2 million as my basis for this year. And that's probably right. $3 million for 1 month, $1 million for 4 months. Now I'm back to $2 million. So based upon that, I'm up over 70% on the year. And I'll take that. I'd like to get over 100% for the year, as we all would. So I'm going to keep moving for that. And this is not an annualized number. This is an absolute number year to date in this account. Last week was impressive. We might see a continued rally into the holiday weekend. Rising rates might impact tech, however. Big economic, this data, Fed members speaking, all that could put all my ideas at risk. As I said earlier, although I added to my long exposure during the week, on Friday I added some out of the money hedges just in case. These are things that don't cost much, that will most likely be sold on Monday or expire worthless. But if the market moves against me, they protect me a lot. It's like my parachute. Now, last week I mentioned I had some computers for sale, or 2 weeks ago, and I didn't give you all the answers. Let me just tell you 2 of them. There's a third one, but I couldn't remember all the characteristics, and I'm on the road. If you are looking for a desktop replacement, this is not a go on the road laptop. This thing is a beast, all right? It's a gaming computer. All my computers for trading are gaming computers because they have the mix of processor, video cards, memory, etc. I received this a little bit less than a year ago. It's got a 10th generation i9 processor, 64 gigabytes of memory, a total of 4 terabytes SSD in RAID 0 formation, 4K resolution, NVIDIA graphics, and it's got premium support, which means they come to you and accidents, etc. included. I bought it, my wife's in the room, this is dangerous, for $5,953. It's a year old, and typically I sell them for about 60% in the first year, so I got it at $3,400. Now, if you buy a computer from me, it comes loaded with some cool things that will help you in your trading. All the indicators that I have that are non-proprietary going forward, I will share with you. When I mean non-proprietary, if I create them, if I have permission, I share. If I pay for them or somebody gives them to me and says I can't share them, I don't share them. I can assure you that the value of the package that comes on the hard drive far exceeds the price. Now, the only downside of this computer, and it's mint, because the reason it's mint is the downside. It is not a travel computer, even though it's a notebook. It's a great computer if you want to be limited footprint and power. The reason why it's not a travel computer, it's got 2 massive power supplies. It's a desktop processor. The travel computer I have for sale, it should be white because that's what I have. And this is a current model. It might be a 9310, actually. Essence of honesty, let me make that. It's a 13.4 inch 4K screen, 11th gen i7, 16 of memory, 2 terabytes of SSD, warranty through October 2023. This one's extremely portable. I've got multiples of it. That's why I'm selling it. $1,500 comes with the same hard drive package. All right, enough of the advertising. So keep notes. The only thing I could sell you if I wanted to is computers. I don't sell anything to do with trading. That's not my business. Very quickly, let's just look at my market force and divergence page. And I like to look at this just to get a sense of how extended the market is. So let's start with the E-minis. Now, I learn a lot from this page. First of all, you got daily, then weekly, and then monthly. Again, these are futures. Green arrow up, person buy, person buy, person buy. So we're in a John person buy daily, weekly, and monthly. We have green bars on the daily, blue on weekly, green on monthly. Green says I could be long or hold, I should not be shorting. Check off another for the bulls. Third thing, I'm within the envelope. That's good. Now, the first dent to the bulls is this red dot here. The red dot says I got higher highs, but I don't have higher highs on the MACD. So there's some reduced participation in this, reduced pressure. So that's something that will build up and resolve with the market rolling over. But it can go for days or, as you can see here, for weeks before it resolves. I come down here, my weekly bond will turn green. That's my longer term direction of the market. So that's bullish. And my high jump is at 64. When it gets to be in this range here, when the high jump in blue is 96, 94, 95, this is areas of nosebleeds. And when it starts to get hit 100%, it always rolls over. We're only at 64%. So I look at the E-minis, we're bullish. I'll leave it at that. I look at the Dow futures. It's actually this RSI is fired as well. That's even more bullish, but the weekly bond goes red. I still think we're bullish here. If I look at the Russell 2000, bull, green, I'm looking at these numbers are not problematic. And the Nasdaq, which had a big run this week, probably of all of them, the one that's maybe the most at risk. It's had this MACD divergence ongoing. Look at the MACD histogram on this peak and over here. So I don't even need to look at that. I look at my red dots. Notice that it's got a blue bar, and you could go from 63 to 95 in 2 or 3 days. So the Nasdaq, which was actually soft on Friday, is the one that has me concerned, but concern here is a little concern. Market feels like it wants to go higher, and I can't make that seasonality up. Now let's go and let's look at the market. So let's go down to major market analysis user groups, major markets plus, hit the warehouse, go to top-down view, which is 1 day's performance, a little bit of 5 and a little bit of 21. And let's find the S&P 500s, and we're going to start there. Strength in the market when ranked by the combo. FANG stocks, look at this, they're up 15.2% this week. Is that not strong? Sometimes I get it right. So FANG, mid-caps, biotech, Nysc, industrials, bunch of ARC things making it to the top. Look at the bottom, gold, VIX, Bitcoin, dollar. Dollar was down 2%. Dollar was up on the week, 0.5%. There's the Nasdaq 100, up 2.1 on the week, although it was negative on Friday, just a bit. All right, so now I got to find the spiders. Here it is, S&P. Perfect. All right, so let's very quickly look at the major market indexes in HGSI. This thing here is maroon. That was a eureka. That's typically a bearish finding, but it really didn't work this time, did it? But it's out there. Notice we haven't had any Hindenburg's fire in this program in ages, and the weekly bond will turn green. If we look right here on Thursday, we had a mobile breakout from the squeeze. We're in a John person buy. We had a weekly high close doji on the weekly side. How can you not at least start the week thinking you're bullish on the S&P 500? If I go and look at the Dow Jones Industrial Average, we broke out above the moving averages, mobile breakout, John person buy. I could convince myself that I've got a lower low and a higher low on the market catcher, which is positive convergence, also a bullish sign. So if I look at the Dow, if I had to tell you going higher or lower, it looks to me like it wants to go higher. If I look at the Russell 2000, using the IWM, Mobile breakout from a squeeze on Thursday, kahuna on Thursday. Do I think it's going higher or lower? A little bit more difficult for me. And the reason why it's a little bit more difficult for me is because it's in a box. And we're up near the top of the box. Now, the others broke out of their box. So let's see if the Russell can't break out of this. But the box is something, I won't say it's got me concerned, but it will temper some of my enthusiasm. And then the Nasdaq, which we had a little concern on TradeStation. If you go back last week, and it doesn't show as much on the futures, but if you look at the Nasdaq last week, the Nasdaq last week was at a triple top, but we broke right through it. So what would be the most bullish thing the Nasdaq thing could do is trade back to that top on Monday, Tuesday, Wednesday, and then go off to new highs. But we shall see what happens. I mean, if I had to pick bullish or bearish, I'm bullish. All right, so that's the Nasdaq. Let's look at the IBD 50. Just give me a sense of what growth stocks did and what your portfolio probably did. We have not taken out prior highs. Growth stocks lagged. We had a doji, which is maybe bothersome, but we were up on the week, more bullish than bearish. You can look on the weekly. We sort of got our line in the sand established with our chandelier. Not as strong as I'd like to see. I probably will see more strength if I look at the FANG. Look at the FANG. Not quite out to new highs. It's still got a ways to go, but it's broken out of its box that it's been in, or at least at the top of the box right here. Let's see if this breakout can continue. Biotech had a strong week. And you could see Biotech, is this a cup and a handle and a breakout? Who knows? But Biotech looks strong. Biotech looks like it goes higher. And if I bring it down and I look at semiconductors, which have been leaders, then were lagging, still sideways, but on the week they were up nicely. I don't pick on Cathie Wood. I just pointed out that a lot of her things have been down. But let's see what's changed. Autonomous tech and robots has broken out of a squeeze. FinTech innovation has broken out of a squeeze. Genomics breaking out. Innovation breaking out. Israel breaking out. Next generation internet breaking out. Space and exploration, man, am I glad I had Virgin Galactic. That was a shocker. They get a license to fly passengers. I'm not volunteering. When you see the ARK indexes doing that well, you know growth is doing fine, and Bitcoin, much to my son's chagrin, is breaking down. All right, so you got to be bullish, and you've got to be bullish because if nothing else, that seasonality is to die for. And I don't mean dying like your account's going to die, but that is amazing. I think most of it occurs in the next 10 days too. So we shall see, but very interesting. The fact that I'm bullish probably means the market rolls over, but we shall see. All right, I got 100, and if I do this right, I should have 174 industry groups in HGSI. There I am, and over here I'll have 174. So I use 2-day force as my determination of strength versus weakness short term. 64 to the upside, 26 to the downside. Investment, metals, casinos, financials, gas services, e-commerce space, steel. I thought there was infrastructure bill, semiconductors, exploration. A lot of the typical traditional growth stock groups are down there. If I look at 5-day down, I've got 29 versus 5-day up, I've got 70. So this market is decidedly bullish. There's probably some rotation going on. I like to look at the top 10 and start to find stocks that might be appealing. I'm going to open back up my information window so I can look at earnings on this one and what the company does on this one. All right. So let's go ahead and let's right click on renewable energy, left click change to industry group, and let's look at all of them above the blue mark and maybe go one below in this one. Sunrun, we talked this thing about 2 weeks ago when it was breaking out of this pattern. It's going to start running, I think, into resistance here. You could see it was support here. It did not get there on this prior run up. It's had a nice run off the bottom. I might be taking profits, but just because I think it's going to struggle at this 200 doesn't mean it's not going to break through it. Fundamentally, it's not being driven by earnings. It's more the story probably benefits from an infrastructure bill. TPL, it's not the right way. You got to make sure it comes up in the order. Click it again. First Solar, I do like. Why? First Solar had 2 kahunas in a row and a pocket pivot, person buy, mobile breakout from a squeeze, Bible gap up all in the last 2 days. Weekly bongo turned green, closed above the 200. I'd much rather buy this at a higher cost than buy the prior one. It's got that 200-day moving average now as support. Jinx had some positive earnings, lots of momentum. Friday, mobile breakout from a squeeze, person buy, pocket pivot, and a kahuna. Again, it's got that 200-day to get above, but I'd have no fault if somebody wanted to be buying that. Just be aware it's got to get above the 200-day moving average. Enphase broke out. We talked about this one back here. It's in a nice move up. It had a doji. Is it starting to lose some energy? I don't know. It's got great earnings per share growth coming in after stubbing its toe. Canadian Solar have earnings not till August, and it too fired all the momentum indicators last week, but it also has to worry about its 200-day moving average. So not perfect, but maybe First Solar is as close as you got. Life Science Equipment, change index group. Have no idea who these guys are. Sometimes I recognize these companies. Atasa Therapeutics is breaking out to new highs. It's a cheap biotech. I don't know anything about them. Major league under demand. How many million shares? 92 million shares traded. Average is 19. This sounds to me like a meme stock, or they just cured cancer. So I think this is probably a meme stock, not for me. Abbott Labs, a consistent turtle in the old days. It's underperforming the market now. It's below the 200, below the 50. Pays a 1.4% dividend. Had a nice day on Friday. Pacific Biosciences, it was being bought for like $12 a share, then it was blocked by the government. How often do you see a failed merger and then the stock runs to the moon? I like this company a lot. They pull back and it looks like they're getting ready to run again. It's the story of molecular medicine, precision medicine, genetic analysis. I think they're a nice company and their stock looks like they want to go higher. Quidel, this one has killed me this year. I kept holding on thinking, man, with this earnings per share growth, it's only going to go higher. The problem is a lot of these companies in this group are tied to SARS, COVID, and they had amazing financials because of COVID. What happens when COVID is gone? I don't think we're going to stop testing. Quidel, maybe it's compelling down here, but as I said, I've gotten clobbered by this stock this year. It's kept going down despite fundamentals. Don't know this one, and then we're back. I usually go down as far as the index group. Specialty apparel, several of these look good. I have several of them. Let's see, start with Express. Seems like an old name. I wonder if this is a meme stock. 110 million shares traded, 13 million average, 21% demand. I got a feeling that the Reddit crowd has got a hold of Express. I don't play that game, but I have no problem with the chart pattern. TJX, 13 million shares traded, twice the average, pull back to 200-day. It is moving up. Great earnings per share growth. Footlocker, I think Nike had great numbers and propelled these companies. Footlocker, Bible gap up, mobile breakout from a squeeze, person buy, pocket pivot kahuna. That one looks interesting. Gap, I'm in this one. I think Gap is going to run again. It's got to clear its chandelier stop, which is right above it. Look at this earnings per share growth. I currently have position. I also have a substantial position in Abercrombie, which also looks like it's getting ready to roll. So a lot of things to like in these, what really look like teenage apparel stocks. Automobiles, Tesla, man. I mean, I guess if I ignore the fact that the price is $650, $675, whatever it is, and I ignore the price, it's got a multiple of 671, and I ignore the fact that it's an automobile manufacturer, and I ignore the fact that although it's a fun car to drive, it's got competition galore coming. It looks like a buy here. It looks like it pulled back, it bounced around the 200, and now it's breaking out. I just don't know. Can Tesla take out its prior highs? Should we ever doubt Elon Musk? Great looking chart, just expensive stock. And, you look down the list, GM is going to be all electric before too long. I don't know this guy. It's interesting. Tesla, you either love them or you hate them. I had the car. I love the drive. I just didn't love the car. Interesting chart. All right, Biotech Vertex. This thing got beat up when it had some negative announcement on some drugs. Has it reached its bottom? It might have. Had a couple of green candle lows. Made it to the top of the list. Why? Because it had 5 million shares in a $2 move. It's a lot of force. I'd rather buy in the upper right-hand corner, not the lower right. Regeneron, we gave it to you back here, and it's continued to slowly move up. It's now taken out its moving averages. Looks to me like it's going to go higher. Look at the growth rates and earnings. Look at its multiple. Regeneron looks interesting here. Arcus just took over the 200. I don't know anything about this company. It's kind of a sloppy chart. But when I see 3 kahunas in 5 days, big volume coming in, 3 million shares, probably not a story about the memes. I might do some research. That's interesting, mostly because you look at how stock was getting lower, the market catcher was getting less negative, so you were seeing positive convergence. Something's going on with Arcus. I don't know it. I have no idea why, but I'm throwing in my buy watch. CRISPR, one of the genomic editing tests, have been going sideways. It's starting to move up. Moderna, I still am challenged by its market cap, which is now $88 billion. I'd rather buy it off the 50. It's getting extended. Here's another low-cost biotech that looks interesting. It's on my buy watch list. Why? Because it pulled back to the 50 and a breakout here, mobile breakout from the squeeze. Pocket a person buy kahunas, high close doji. I just have to make sure it's not a meme stock and being pumped on. Maybe you can make money on it anyways. Keep going forward. Amgen, sideways, and Tela. Here's Iovance. This is one of the stocks that has huge seasonality this time of year. You'd be buying it at a place where you've already pulled back some. I just don't know enough about it, but this is one that has positive seasonality. All right. Right click, back. Consumer finance. Credit cards. Wouldn't you love to own Discover off of $50 up to $125? Not perfectly tight, but pretty much a straight shot. Great earnings per share growth coming, pays a 1.4% dividend. Mastercard going sideways, took out its chandelier this week. I mean, nothing wrong with that. Amex, kind of like Discover, just keeps on going. Capital One, pull back to support, look for some momentum. Visa, Similar to Mastercard. I mean, I have no issue owning these. They're just not that exciting to me. For whatever reason, I own some of this one, and it looks just like all the rest. This is One Man Holdings. Anybody want to guess why I own this one? Yep, it's the 12.1, but the 12.1 is not necessarily real. They had a special distribution here of $4 a share, but it pays a nice dividend. It's got high relative strength, but the whole category looks strong. Electrical power equipment, Blink National Network, I guess it rechargers. Someday this should be important. Kind of been, is it breaking out? Was that Bible Gap the beginning of something new? I have no issue with this stock, but the one I really love, although it was volatile this week, is generic. Here's GE. I'll get you to generic. Gave us, and we called it out. We talked about it right here. Gave us another buying opportunity back here right off of the 50. This was Friday, June 4th. In fact, if you go back a long time ago, I didn't go back far enough. I gave this stock, and I think it was right in here is when we talked about it, about a year ago at $100. And I know people bought it because I got lots of emails. It's now 400. Not a bad year. Internet media, I like Baidu. I like Baba. Why do I like them? Basing on the 200, two kahunas, two pocket pivots, John Person buy, mobile breakout from the squeeze. Why would I not like it? A, it's Chinese, so you never know what's going to happen. B, its earnings per share growth isn't great, but its relevant revenue is strong. So I'm interested in Baidu. Rather buy it cheap here. Google, what a leader. But is it cheap to buy here? Well, still PE is less than its growth rate. Buying it's always been a good thing for Google. So I like Baidu on internet media, specialty pharma. I don't know if there's anything I picked in here. Riata. Looks interesting here, breaking out here. It's just an expensive stock for a company with minimal earnings. Acadia down there, Mirati. They've got a new cancer drug that'll probably get approved if the stock isn't bought by somebody else. It's at $8 billion. Problem is it's already run a lot. Amgen just got the first drug in the class approved. It's against a molecular abnormality called KRAS. It's a very common abnormality. Everybody thought it'd be impossible to exploit it. Amgen's a big company. It didn't move much. I think Mirati is going to be tied very much to that. Horizon, we talked about it last week. It just hasn't broken out yet. Nice fundamentals, at least this coming quarter. Good seasonality as well. I just typically go through the top 10. Here is specialty chemicals. 13 million shares, average is 280,000. Something happened here, whether this was discovered by the meme point people, so let's go for more info from Web. Or did something happen? Merger. Okay, Bitcoin miner merger. Never mind. Sometimes you get one stock that pulls the whole group up that has that kind of volume and a big outsized move. Well, that's the top 10. Looking below here, there's others that I liked. We'll see them in my buy watch list. So what I've done, I've started by looking at the market, and I've made a case why you might want to be long this week. Seasonality, super strong. I've identified just now some of the top industry groups and looked at the leading stocks in those groups. Came up with a couple of stocks that I like. Now, you saw me hit right click and add them to my watch group. So all weekend long, I'm doing that. I look at a lot of different groups. Now, I have now ended the weekend analysis of my own, and I have my list of buy watch. People have asked me, would I publish this? I don't know. My wife just said, don't. My wife knows that is always right, so I'm probably not going to publish it. One thing I wanted to point out to Duff and Phillips. It is, she's funny, she says, they'll never listen. They'll just go to the buy watch list. She's probably right. 7.3% dividend on a stock whose chart looks like, no, she decided it might be a good idea. It looks like it's going to break out on the weekly. I looked at this because it was 7.3% dividend. And I like dividends when the market is not behaving. So these are the stocks that made it to my buy watch list. And let me just again review what this means. These are stocks whose patterns looked attractive to me that I am going to monitor for possible buys this week. Now, it's not a great list for you because if I already own the stock, I probably am biased not to add it to the buy watch list. So there could be things that I like. It is not a leaders list. Everybody can tell you the last week, the top performers of the week. Well, what good does that do you? I'm trying to give you a list of stocks that might be setting up or still buyable. And you'll notice that it's not 147 different industry groups when you look at the industry groups here. There are industry groups, of most of which are near the top. Some of them are stories. You will notice that almost all of them are in a daily John Person buy signal. The one that's not, Vichy, is at a bouncing point off of its 50 and it's in a weekly buy signal. So you could see the industry groups are here. Now you're probably saying, well, what is that? What good is that? How do you follow that? And the way that I follow it is if it's in TradeStation, I set up a radar screen where I have a list of the stocks that I'm interested in. I have multiple radar screens. And then I have a number of signals that I look for during the day. I've got radar screens for John Person stuff. This is Q stuff. I've got Dr. K stuff. I've got different monitors running, less than I used to have. And I look for signals to pop up during the day. But Jeff, I don't have TradeStation. That's easy enough. You go into Market Watch, and these were this past week's buy watch list. The big winner was Roku, up 17%. And most of them were up, and the worst was down 2.45, which was Amazon. And even then, I told you that I was the box in Amazon. I'm going to import my buy watch list. These are the stocks for this week, and I've got a number of indicators, some of which would actually come with the computers I had that be selling, that match up with what I do in TradeStation. Again, I would never share something that somebody else sells or develop because that would be breaking the law. The things that I've produced, I freely share. And you can see the same stocks are listed here as are listed in my buy watch. So I have multiple ways of tracking them during the week. We are at 1 hour, 4 minutes. Let's go through them very quickly. Sure, that's going to make my wife thrilled, but what else do you do with your lovely wife of 35 years in a hotel room in New Jersey? Magnite. This is a stock that I think is rallying because Google is not changing some of its cookies or whatever they use it, that the advertisers use to target people, but it certainly bounced last week. It had a huge run up that I participated in, pulled back to the 200. You kind of know where support is. Look at the earnings per share growth. Big move on Friday. Right here, let me get the volume. On twice, 2 to 3 times normal volume. So this is Magnite. I didn't want it to be in alphabetical order. Let's see if it's Aspen Technology. This is an old name. I think it came back. They used to make insurance technology. I'm not sure what they do today. More technology solutions. Pull back to support down to the 200. Mobile breakout from a squeeze. Person buy. Pocket pivot and Kahuna. The reason why I like this stock, besides it's an interesting pattern with a lot of my momentum indicators off of support. Look how you can put your stop very close to that price and control your risk. I like buying things off of support. In a break of support, you get out now. Carmax. We know what the automobile manufacturers are doing. They're adding premiums to stickers. You don't buy a price at a discount anymore. It's you buy a car hoping they don't mark it up over sticker much. Bible Gap up on Friday. Carmax, the rest of the auto dealers look interesting. Lithia Motors is another. First Hawaiian is a bank. Now, it may just be stuck in the sideways consolidation, but had a mobile breakup from a squeeze, a new weekly bongo, Kahuna, and some decent volume. Webster Financial, remember, rising rates will be good for the banks. Similar pattern with some momentum. It's got to prove to me it's out of its consolidation. Arcus, we talked about. CRISPR. Gene editing is fascinating. It's maybe a major history of medicine. Imagine if you had a genetic abnormality as a fetus, and they could go in there and fix your genes. It's interesting. Insight. Insight is a company, it's really a great company, and they've got a great product on the market. They've not been loved for a long time, but they broke above the 200. They're about to have all the golden crosses coming in, mobile breakup from a squeeze. They're having a turnaround on earnings. This is a respected biotech. It's got a 20 billion cap compared to the 88 on Moderna. I like Insight here. Lexicon we mentioned, Regeneron we mentioned, Garmin, old boring name, been basing for several months, mobile breakup from a squeeze to Kahunas on Friday. Bank of Nova Scotia, another bank that looks interesting. The Canadian banks have done well because of the weak dollar and energy. Pull back to the 50. I'd like to see a little bit more momentum come in, but it's a nice setup there. 3% dividend. Alibaba, like Baidu, has been in a downtrend for a while, but look at how many kahunas and pocket pivots in a row. Look at the price going sideways and person market catcher going and turning positive. Weekly bongos green, good earnings per share growth. Maybe it's time to look at Alibaba again. JD, cheaper version, doesn't have as good fundamentals, but I like it anyways. Here's Cinerex Energy. Just looks like a nice buying it off of support with momentum, which is what I like to do. Great earnings per share growth. Diamondback has already started running. Great earnings per share growth. A leader. I have a position. Magnolia. Ovintiv. I don't know this company from Adam. I can't use the word I was going to use. I got very excited when I saw its earnings per share growth. Very impressive. And it's not an expensive stock. Looks like it wants to go higher. Service Corps International, I looked at it a couple weeks ago. It's really going sideways. If it broke above a Chandler stop, I'd find it interesting. Cineo Health, nice lower left, upper right, looks like it's breaking out here. Tempur-Pedic. Again, a lot of stocks with this sideways pattern for quite some time, setting up in mobile breakup from a squeeze and a kahuna on Friday. You could certainly put on something like this. It might even make sense to put a box around them and say, it's still in the middle of the box. If it breaks out of the box, I want to be in. But I'd have no trouble buying it here. Just make sure when you get in this area that you're careful. Carrier Global, spin-off, all-time highs, wants to go higher. Look at the momentum lining up, sitting just above its moving averages. AEP, if you're looking for a utility, not from a period of strength, but you want to buy these from weakness. Kahuna, person buy, mobile breakup from a squeeze, pays a 3.4% dividend. Baidu, we mentioned. Yalla Group, internet media, it showed up on a number of my scans. Mobile breakup from a squeeze, new person buy, pocket pivot, Kahuna, buying it off the 50 again. Don't have to give it a lot of room. The lowest low in 4 days is this bar here. Let's just see what it was. 17.33. My buy price is going to be about $20. So it's a little bit more range than I would think, but dollar-wise, it's not a big stop. This is interesting. You could also quickly raise your stop to the 50 if it gets over it. Yalla. D8 Holdings, don't know anything about them. Probably skip that one. Athene Holdings is an insurance company. Here's one that was in a squeeze for some time that broke out on Friday. Lincoln National, another in the life insurance business, had been hurt, but if rates go up, these will benefit. Look at the earnings per share growth coming in. It pays a dividend. United Health, pull back. Now it looks like it's ripe to run, right below the chandelier. Let it close above the chandelier stop. Mobile breakup from a squeeze, person buy, pocket pivot, and Kahuna. Ollie's Bargains. Is this the time it runs? I can't tell you. It looks interesting. It's something that's on my watch list. A watch list means I'm going to watch it. I'm not buying 55 stocks. WMS rather, Advanced Drainage. I've been in and out of this stock. I've gotten whipsawed a few times. It's in the building world. Sideways move. Took out a chandelier stop on Friday. Schlumberger, I own Halliburton, but maybe I should own this one as well. Kind of a boring play on the daily. You can see on the weekly, you're buying it off of support. Assured Guarantee, another insurance play coming off of the 50 with a mobile breakup from a squeeze, person buy, pocket pivot, and Kahuna. There's a dividend 1.7%. Hershey Foods, some friends of ours, the kids were just gushing about how much they love Hershey Park. Then I looked at the stock and said, I could gush here too. Uptrend, pull back to support, a bunch of momentum came in, long-term uptrend. Not much in the earnings per share growth, pays a nice little dividend, probably a defensive play. Donaldson Company, pollution control, let it get above its chandelier stop. Invitation Homes. The homes were weak. Some had some good earnings, though. Invitation's earnings are not till August. You've got some time. Look at the earnings per share growth. High base. Looks like it wants to take off. Refiner and retailer of energy, Holly Frontier Corporation. Amazing earnings per share growth. I am a sucker for earnings per share. Sometimes, like Quidel, it kills me. Most of the time, it serves me well. It's sitting right at the 50, had a lot of momentum come in. It's not the healthiest chart there. It's still sort of in a downtrend. I'm interested in watching Holly Frontier. Cousins Properties, gradual uptrend, pull back to the 50 with a person buy, 3.2% dividend, great looking earnings per share growth. Hudson Properties, let me just say the exact same words. In an uptrend, pull back to the 50, a new person buy. This one also has a pocket pivot and Kahuna, and great earnings per share growth, pays a 3.5% dividend. Outfront Media, a REIT that I think does signs, billboards. Nice uptrend, pull back to support with a person buy, mobile breakup from squeeze, Kahuna, pocket pivot. Great earnings per share growth. Sabra REIT, this is a healthcare. They do nursing homes. They've been in a sideways move for quite some time. Are they ready to break out? They pay a 6.4% dividend. Spirit Realty, pull back to the 50. You can always figure out what they do by reading it. There's a lot of different REITs that do different things, but I like it when they pull back to the 50, have buy signals, good fundamentals, and pay a 5.1% dividend. Store Capital, 4% dividend. The rest of the story is the same. Vici, 5.1% pull back to support. They own some casino properties. Weingarten Realty, I think they do shopping centers. Pull back to the 50. Shopping centers are dead, huh? Then why is it going from 18 up to 32? Sitting right at the 50. Great earnings per share growth, 3.9% dividend. Canadian Solar we looked at before. Enphase we looked at. First we looked at Chipotle, kind of a sideways play. Heard a lot of positive things on it on the media. This has been a long-term winner. Look at the earnings per share growth. Darden, back to reopening play, broke out, had been basing for several months, had a Bible gap up on Friday. I already looked at Abercrombie and looked at Gap, looked at TG Maxx. Yeti, another retailer, up move, sideways, mobile breakup from a squeeze, pocket pivot kahuna, and a new person buy signal. Decent earnings per share growth. Vale, kind of in the iron ore space, amazing earnings per share growth, teeny multiple, big dividend. My bet is it goes higher. The challenge is, what is China going to do? They seem to be manipulating this market by putting supply back in. Floor and Decor, another play on the home building and home, buying a used house, fixing up your house. Home improvement. Thank you, darling. Broke out above its chandelier stop, and it's 50. 3 kahunas in the last 5 days. Pretty soon my wife will be able to give these. And that was my buy list. So, as always, these are not investment advice. I am not telling you what to buy and sell. I've tried to show you some different stocks that I found interesting based upon top-down investing. Next week, I'm going to do it on Monday. I think I'll be busy on Sunday. I know Monday is a free day because it's a holiday. So, y'all have a great week. Be safe. And see you next week. Goodbye.